All right, what is good, everyone? We're about to jump straight into our NASDAQ review for April 7th, 2026. So, starting off with our bias for today, this is what Quan put in the chat at 9:18 a.m. So, I'm gonna just play a little small clip just so you can get the gist of
So
what he's
obviously, this
saying.
hourly gap here is very, very important. So we'll keep an eye on this. As long as we can stay within this bearish hourly gap, I think we can go lower. Reasoning why as well, we stopped right before our new week opening gap. So I would love to see if we can get down into that area. But you know how this market is currently. Our expectations definitely have to be low. We do have an ATM here on an hourly. We took up made it high today, closed below. I want to see if we can use this to go lower. They're probably not going to do it in the best way possible, but we'll see.
So, that right there is essentially what Quan put in the chat at 9:18. So, now I'm about to show y'all what I put in the chat at 9:33. So, this is the bias that I gave in as well. And honestly, y'all, I really didn't even look at the market until I got down here at like 9:25 ish. So I really didn't even see what Quan said. I did just ask him, just to make sure niggas on the same page and all that. But my bias, I didn't really have a hard bias for real. But I did prefer the low today as a draw over the high today. And we was watching the old hourly fair value gap from yesterday to determine whether price was going to remain bullish or bearish. So this is the lay of the land at 9:31 a.m. on NASDAQ hourly chart for micros continuous contract. We had already repriced above the previous weekly high. That was our initial draw once we opened the week at 6 p.m. on Sunday. And we can see that we have rallied towards that going into our AM session on Monday, and we really have been consolidating near this level. But overall, we're seeing the market reject this level. So if we're seeing the market reject the previous weekly high, then we can anticipate that the market is wanting to go lower to some degree. Does that mean that we're just going to go to all the way to the opposing end of the previous week low? Not necessarily. You have to factor in other things. While that might be something that could occur, that's not something you want to look for to happen in just one day, and that's your trade idea. So for us, what we had as a idea was watching this hourly gap right here that we have formed yesterday. So this was formed at 4 a.m. during London session. That is our London session kill zone. This is also the first gap that is formed before we take out the previous weekly high. So this is going to be a high probability inversion fair value gap. As long as we can see that the previous weekly high is being used for smart money to accumulate shorts, distribute their long positions, then we can look for this gap to be a catalyst for the market to want to reprice lower. You just have to wait for the right time. So we can see that all throughout here, we're supporting this gap during our previous day, Monday. So that was kind of unfortunate. It wasn't really much that we could do on Monday, but going in, extending this out in time. We open the day and trade below it, and then we reprice higher, taking out the initial high today formed at 6 p.m. during our London session kill zone. Again, once we see that happen, what do we see take place? Smart money is accumulating short positions above the previous weekly high. So any longs that they're in, they're taking them out and they're getting in short, anticipating that we will move down lower towards sell side liquidity. Well, where is sell side liquidity at the time that we're above the previous weekly high? We have this low here, and we have this low here, and we have this low here. Those are all the sell side liquidity pools that we had for this day or for the week going into the market. So then we see the market slam lower during pre-market, and that gave us a displacement candle that created a hourly fair value gap. Notice that this hourly bearish gap is overlapping the old bullish gap from over here. So this is where you can anticipate where inside of this bearish gap should price want to reverse inside of this old level of fair value that is over here. This is why you have to extend your gaps and know what gap to use, because obviously if you're using the wrong gap, then you might not get the information that we seen here. So going into our AM session, we can see that we did initially take out this low, but we did not take out the low that is here, and we stopped right at the high of the new week opening gap. So what did we see happening? The market repriced lower, left a hourly gap, left a low, and now they're retracing into the gap. So people that don't understand what is going on, they're seeing this movement higher and they're getting in buys. They're thinking we're going to relative equal highs, right? That's what ICT told us. However, they are not looking at the higher time frame. Previous weekly highs being rejected, bearish market sentiment, and we're seeing that the market is engineering sell side liquidity at our new week opening gap. So this movement higher is simply to go lower. So this is the key level that we was watching, not just this hourly gap, but specifically this old hourly gap right here. So now let's go into our lower time frames and see how price delivered. So this is the delivery that we got at 9:30. 9:30, we can see that we open, trade higher above the pre-session highs right here. So this is going to be buy side liquidity. Notice that this buy side liquidity pool is right below the old hourly fair value gap. So again, they are engineering liquidity to be taken out at a later date. People who see this drop lower, they get in sales, stop losses here. Now this is going to give us the power to move lower down towards our objectives, which is the low today here and our new week opening gap and all of the other levels that we have mentioned being the low of the week here. So we can see that we open at 9:30, immediately take out that high and fail to close higher. We left a very long wick. So this is telling me that people who got in breakout buys are now trapped, and people who were in sales are now stopped out. We can now start to look for order flow to shift to bearish, and then we can look for our typical ATM signals. So we see not really much displacement. We're kind of just chopping up, waiting for our first presented fair value gap. We get it right here. But notice that this first presented fair value gap is a bullish gap and our bias is bearish. So is this something that we want to see used as a level to go long? No, we want to see this first presented fair value gap, since it's bullish, to act as a inversion fair value gap. So we see the market create a swing high. We close below the first presented fair value gap, and we also close below the up candles right here. So this right here is our ATM model. What higher time frame key level is it tapping into? Our 9:30 opening price. You see the bodies of the candles are not closing above that level, right? So now we see the market displace lower. We see the market stay in the lower half of our first presented fair value gap. This is how you can trust if the market is truly going to use this level as an inverse fair value gap. If we see the market stay in the lower half, bodies are not closing in the upper half, that is what you want to see for a bearish inversion fair value gap. And notice that the bodies are also not closing back above our ATM model. Again, this is signatures and price that you have to look at. That's going to give you the confirmation that price is going lower. This is going to give you the confidence to hold, and then you will be able to catch bigger runs in price and not get stopped out prematurely. So we see the market reject from our key levels and move down into this sell side here in this last gap in the range before we hit the low today and our target of the new week opening gap. So this was a point that, depending on how much you had on, depending on where you got in at, you could have taken a partial inside of this gap, because again, this is sell side liquidity engineered right above a key level, the last gap in this range low to range high. So once we got down here, we did get below it. I wanted to see us just basically melt off, but we did not see that. Seen a deeper retracement back in to this high right here, which is the high of 945. Once we seen that, that's where we see the market roll over. We see us get below that last fair value gap in the range. And now we're using it as a premium level to sell off from. And then we go right down into the low today, which is this low here, and our new week opening gap, which was our target. So my entry was here on this candlestick, and then we got out basically inside of the new week opening gap. Now, it did eventually continue to melt down to the low of the week, but that was not necessary, and that was not something that you needed to be profitable. So let's just look at some of the things that we said already in shorts, 936 ATM, high resistance delivery, keeping stops where it is. So going back to our trade, my stop right here when I got in, it could have been right here, right? But since I knew that price was likely high resistance, I just kept it above the old high that we took out right there, just for safety purposes. Now, once we started to displace lower, I was able to move my stop down to here, and that's when I trailed my stop. So you do not want to trail your stop prematurely until we get to a very important key level where now you don't want to see it's already breaking structure. Like you need to see it breaking structure. You don't want to see it just stay like one candle moves away from the ATM. Now you move your stop to break even because that's how you get taken out of the trade and watch it run without you. So kept stops where it is. Target 24,131. That's the high of the new week opening gap. I see a few of y'all got stopped out too soon. Great trade here, basically the same entry. And then this was our target getting hit right there. So that was a very, very good example of a ATM model trade using very specific key levels. It's the same key levels that we use all the time. First presented gap, new week opening gap, higher day, lower day, hourly gap. Like it's literally damn near the same thing every single time, and it's not changing. So hopefully you understood this breakdown of the ATM that we took today. If you have any questions, just let me know, and I will get back with you at some point later today or later this week.